Welcome to Trading Club 4A6. I'm your lead educator, and we're starting with the basics. In this first lesson, we'll be covering the fundamentals of trading and what sets it apart from investing. Imagine you're trying to understand a complex recipe. You look at the ingredient list, and it seems straightforward, but as you start adding ingredients, things get tricky. That's what trading is like for many beginners. They understand that trading is different from investing, but they struggle to differentiate between the two. So, let's simplify things. Investing is like buying a house. You put a down payment, maybe fix it up a bit, and then sell it for a profit years later. The goal is to increase the value of the house over time. On the other hand, trading is like running a convenience store. You're constantly buying and selling items day in and day out to make a profit. You're looking for small wins, and you're always on the lookout for the next opportunity. To make it clearer, let's look at an example. Suppose you're buying and selling soybeans. You buy 5,000 soybeans at 10 each, planning to sell them later for a higher price. If the price rises to 15, you sell, earning a profit of 50,000 minus trading fees. However, things don't always work as planned. Market conditions can be unpredictable, and even expert traders experience losses. Trading involves risk, and your potential losses can be substantial. Think of it like this: a strong storm can destroy your store, leaving you with nothing. As a beginner, it's easy to get caught up in the excitement of trading. But remember, there are common mistakes to watch out for. Many beginners dive into trading without a clear strategy or sufficient knowledge. They start off with high hopes, then get discouraged after losing money. One common beginner mistake is to try to be a guru from the very beginning. They think they can predict the market perfectly, but they don't take the time to learn the basics. Then, when they lose money, they get frustrated and give up. To avoid this, focus on learning the basics first. Understand the markets, identify risks and rewards, and develop a clear strategy. Start with low risk, small trades on a demo account, and gradually increase as you gain confidence. For example, let's say you're new to the stock market and you start with a demo account. You begin by buying and selling stocks with small amounts of money. As you gain confidence, you gradually increase your trades to a point where you're comfortable. Another common mistake is to over-leverage. Remember, trading is like running a store. If you buy inventory that you can't sell, you'll lose money. The same thing is true for trading. If you can't afford to lose the money you're risking, don't risk it. For your practical homework, I want to challenge you in a different way. Open a free demo chart or paper trading journal, and write down the difference between trading and investing from your understanding. Now, let's take it a step further. Assume you have 10,000 in a trading account. Identify two markets you'd like to trade, and write down a hypothetical buy and sell price. Be sure to record the potential profit and loss. Don't forget to consider trading fees and other costs. Remember, trading involves risk, and there are no guarantees of making a profit. To make it more challenging, let's add a twist. Write down two possible trade scenarios for each market. The first scenario should be a bullish trade, where you think the market will go up. The second scenario should be a bearish trade, where you think the market will go down. For example, let's say you've identified the stock market and currency market as two markets you'd like to trade. Here's what your paper trading journal might look like: stock market bullish trade, buy price 100, sell price 120, potential profit 20,000, risk 20, bearish trade, buy price 120, sell price 100, potential loss 20,000, risk 20, market currency market bullish trade, buy price 110, sell price 120, potential profit 10,000, risk 10, bearish trade, buy price 1 20 sell price 1. 10 potential loss 10 zuzuzu risk 10 in a week, come back and reevaluate your positions. This will give you practice in adapting to changing market conditions. Remember, trading involves risk and there are no guarantees of making a profit. Over the next few lessons, we'll explore trading strategies, risk management techniques, and much more. For those who want to take their learning further, I invite you to join us at Trading Club 4A.